TJ, the Wheel Deal, coming at you live with a special edition of Wheelers. I have over here on this side, I've got David Jaffe from beststockstrategy.com. How's it going, my man?
Good. I'm really happy that you reached out, and just from like the 5 or 10 minutes that we chatted before we hit record, I think we have really good energy and a really good vibe, and I think that this is going to be an amazing chat.
Yeah, I'm looking forward to it. I want to give a shout out to Dallas Matthew. He encouraged me. He was like, "You need to get this guy on the channel. He knows his stuff. Come prepare with your questions. He's got major OCD. He went to an Ivy League school, so he was throwing you under the bus, bro. Already, great.
Awesome.
I
Yeah.
went to a little public school out in Austin, Texas. So I'm not that OCD. I'm kind of free, willy nilly, if you will, but I'm not that whimsical. I've got a
Well,
strategy that I implement. But I want to get to know you, David. Talk to me.
real quick about that, I think I started being OCD probably because it's probably genetic. I started becoming like very OCD around seventh grade. Although I did go to a really bad high school, and that was actually some of the most fun times of my entire life, for like those 4 years. I will say that those people who go to like very, very competitive high schools, I know that this might be a little bit counterintuitive or a little bit controversial, but I think that if you have a lot of ability and you're a hard worker, then it might actually be a little counterproductive to go to a highly competitive high school because you're still young and you can't necessarily enjoy yourself. So I got good SATs and then went to Cornell, and I was really only behind all the kids who went to elite public and private schools in like Westchester and Long Island for the first semester. After the first semester, I was completely caught up, and unlike them, I was actually able to dramatically and significantly enjoy my high school. So yeah, I mean, it is what it is.
Gotcha. Well, let's get into it, man. Let's get into it. A little bit about yourself. Tell me a little bit about your background, and then how or when did you decide that the stock market was your thing? Because we talked a little bit before we got on that it's kind of like, to me, it was the equivalent of when I met my spouse.
Yeah.
I was like, dude, finally, bro, finally, I got my thing. And I've been investing for years, David, but I didn't become the Wheel Deal till I was 45, 46 years old. So late in life, I'm 48 now. So how was it for you? Walk me through that process.
Well, I definitely agree with you about the wife thing. When I met my wife, I kind of knew pretty instantly. Like, we went to a Broadway show, and I got her tickets on a web. This was in New York City, on a website called Broadway for Broke People. And I wasn't broke, but I don't feel like I need to spend excess money. And then when I told my wife that, and this is our first date, I got tickets to Jersey Boys for $27 each. She looked at me, she said, "Oh, that's really smart." And I was like, "Oh, definitely going to have a second date with this one because she doesn't like wasting my money." And then regarding your main question, I so I was kind of pushed into investment banking by my dad. They kind of always say that you can tell the story of someone by looking at the story of their father. A lot of people are like heavily influenced by my dad, by their parents, their expectations, or maybe something that their parents told them and they want to like prove their parents wrong. And my dad kind of like pushed me into investment banking. And then also a lot of my friends at Cornell, because I majored in finance, we always wanted to go into like private equity or investment banking. The interesting thing, which I don't believe a lot of people would believe or even know, is that when you're working as an investment banker, you are transactional in nature. So we're taking like people who want money and trying to match them up with people who have money. So whether it's a private company or public company, but we don't deal with trading, And I think that all this talk about like Goldman Sachs like manipulating the market and all these like hedge funds like trading against retail and things like that, I think that it's pretty common in human history where people are just looking for a fall guy. And at least from what I experienced, pointing the finger at somebody else and making yourself a victim is not a good way to live. And incidentally, I can tell you that from my experience working in numerous investment banks, they don't try to like take advantage of retail traders because institutional traders are acting more so as market makers. But I think the important takeaway is that I didn't really learn much about retail trading when I worked as an investment banker, except potentially that the markets are efficient, and those people who spend tons of hours looking at financial statements and things of that nature, especially for large companies like Amazon or Google, or things that have like a few $100 billion in market cap and above, I don't necessarily think that that's very valuable. And then what happened was I moved from New York in 2017, and even though I had a good amount of money because I'm relatively cheap and don't really spend a lot, I just got really bored just walking around Miami and not really having much to do. Like, how many times can I speak on the phone with my best friend, or, you know, just walk around the building with my wife? I've always been like a workaholic. So then my wife actually suggested that I start like a trading website. So that's
Mhm.
what I did. And, slowly but surely, like over the past like 4 to 5 years, it kind of grew. And that's where I am now. And then regarding options, I was drawn to options because I tried like day trading and things like that, and then
Mhm.
I lost money, and I know that every time I say that, there's going to be like tons of comments where like, oh yeah, you just sucked and you didn't stick with it. But the reality is that there've been numerous studies, like
Right, it's hard.
like studies that have looked at like over 400,000 day traders that essentially say that there's no statistical advantage to day trading. One study attributed day trading to like playing roulette at the casino. Another one indicated that there's no educational component to day trading. So, in my opinion, and yeah, I know that there are some people who can be profitable and have like profitable years, but
Right.
are they going to be profitable consistently? And when they day trade, there's a statistical probability that you're going to make a loss. Now, trading strategies that have an expected win rate below 50% is okay as long as your winners are substantially larger than your losers. But
Right.
with day trading, it's not like that. It's basically like a 50-50 probability, so there's no like outsized gain potential. And then with options, I really like them because there's a lot of strategy involved. And I know that people have a tendency to get like super complicated and to use like Greeks and things of that nature. But I think that with options, it's pretty easy to be profitable as long as you're able to control the tail risk and the correlation risk. And I mean, you can even have like the most basic and simple strategy. Like, most people, they fail to beat the S&P 500. And if you wanted, even the most simplest option trader could beat the S&P. All they have to do is sell an at the money put option,
Right.
and they'll collect premium and then just simply hold it. And then that one trade, and then
Yeah.
you get assigned, you'll beat the S&P. Or even if you sell like like an in the money put option that expires like today, right? Like,
Right.
you can collect that premium, then your cost basis is below the S&P, you hold it, and wow, like suddenly you're a better investor than like 90% of the people.
For sure. So have you done buy, hold, and hope? Because you asked me off camera, like, how did I start growing my account? And I told you that I didn't tell you the whole story, but I just invested. I invested blind into the stock market via 401k specifically. And I looked up one day and I was like, holy shit, I got quite a bit of money. And then I got laid off from the oil field in 2020, and the COVID craze happened, right? Everybody was making money, throwing money at the stock market. So the CARES Act was initiated by Donald Trump. It was an executive order. And he basically said, hey, the 10%, that's gone. Like you're not going to have to pay the prepayment penalty or the early withdrawal penalty.
Yeah.
That's gone. So I took advantage of that and I took out $20,000 because I had been just swing trading. I had been swing trading for years in the stock market, and Boeing was my go-to move, but it was like $40,000-$50,000 trades just to make like 500 or 1,000, just like in and out. Dude, just like no real strategy, not studying a lot of the technicals or anything of the sort. But I was just like, I'd buy 30, 40, 50 grand of Boeing. And when it was like 50, 51, whenever I look at it, because I mean, I was working 12 hours a day, I'd sell it. And I just kept doing it over and over because I got very comfortable with Boeing's trading range.
Yeah,
And
the problem. Okay, so with Boeing, when they had the issue with the 737 Max, didn't it fall from like
Huge.
446. It fell from like, I think its all-time high was like 446, and I don't really like trade it, but like
Like $80 or
446, and I think its low was like $89.
correct.
Um,
I was not in Boeing at the time. I got back in Boeing when it was about 110, 115. And
okay.
I played that game until it went up. One time it shot up to about 200 or so.
Yeah,
And,
yeah.
and then it was like, oh, this is going to be great. You know, they're getting a bunch of orders or whatever, because this is all during COVID, right? 2021, 22. And then I think right now, if you look at Boeing, it's probably still under 200.
Yeah,
And
I
it,
think it's about then. I haven't really traded it that much. I mean, I think some good like buy and hold, and then I'll answer your other question. I think like right now there's some now obviously like the market right now is under a lot of pressure. I think it's down like 8% volatility. The VIX almost hit 20 yesterday. Which I think today is like September 28th, and I'm just saying that so when I post this on my channel, they know. Um, but yeah, I mean, I think a few good opportunities now is if you're going to go long or like sell some puts, potentially RTX. I've been watching the price action on RTX over the past few days, and it's held up relatively well considering that the market has sold off primarily because RTX has already sold off because they have a problem. There's a problem on some of the inventory that they sold on some of the merchandise that they sold, or planes or something like that. So it's trading around like 73. And then I also think that TLT is a
for people that
is
aren't familiar, he's talking about Raytheon. Raytheon
yeah,
used to be part of the Dow 30, and
yeah.
they were replaced by Salesforce, I believe. When
I think
they do a mix up every few years, and I think Salesforce is the one that took their place in 2021 or 2022, I believe.
well, Raytheon, it used to be RTN, and then I think it merged with another company. So now I think it's called like RTX Corporation. But yeah, like it's Raytheon, and then I think another good purchase would be something like a TLT. Like I remember when TLT was trading at about like 170, 180, and now it's about like 87 or 88. And another benefit of TLT is that it's actually uncorrelated. In general, like bonds are tend to be uncorrelated with the S&P. So one of the issues with selling puts and then taking ownership of the stock is that you have significant correlation risk if you're just simply long equity. And then if you have a situation where you have like a grind down market, or where the market falls like 10%, then you want to make sure that one, like you're hedged, and also that you have like some equities or some indices or ETFs in there that aren't correlated. Now, regarding your other question about like what I do, um I'm a little bit hesitant to take ownership of stock. I will do it in specific circumstances, and part of the reason is that taking ownership of stock tends to be a little bit less capital, well, significantly less capital efficient than options. Like for example, if you sell options, especially if you're using like portfolio margin, then the portfolio margin provides you with free leverage. So especially now when you have rates that are like 5.5%, you can actually sell that premium, collect it. You're not paying anything for that basically, like, now obviously there's no free money, but for that free leverage.
Mhm.
And then you can either do like a box spread, or you can invest that in like 3 to 6 month like T-bills, and you're earning like a free 5 or 6% every year. And the other issue with taking ownership is right now, really the only stocks that I would take ownership of would be something like RTX or like TLT. And if I had to rank them, I would probably do TLT first, just because I think that even if they continue to raise rates, then the low point would be, around like maybe 75, something like that. And you can always like sell some call options to reduce your basis on that. And it's trading at 87. So, and that you're not gonna call the bottom. So I think that selling it like an at the money put option right now, at 87, I think that I'd rather just hold on to it and potentially sell it when it's trading at 130 or 135, 140, something like that, whereas your downside risk is relatively capped. um, but yeah, I mean that's basically, and then I sell put options. I have a lot of strategies that I implement.
I've been
Some
watching a lot of your shorts, and it's confusing even for someone like me, because because there's, you can buy a call, you can buy a put, you can sell a call, you can sell a put, but then everything's a derivative of those combinations, and
Yeah,
it could get it could get pretty complicated for the average Joe, so to speak. So I tell people I sell puts, I sell calls, I collect premium, but then I also roll. I stop, drop, and roll. I'm like a fireman, and the fire is coming. You sell some cash puts, you're going to get caught with your hand in the cookie jar. It's just a matter of time. So
So
please
when
put
you
on
say,
you're comfortable owning.
do you like quote unquote average down? Like if you have a high conviction trade and then it get us, so will you be in a
Yeah,
situation where
portfolios yet, have you?
what was that?
You haven't seen my portfolios yet, have you?
I have I have looked at a few of your videos where you discuss your portfolio, and honestly, like from my perspective, if I had that portfolio, I would be completely okay with it. But some of the stocks that you have, like Neo and like some others, they're kind of like very high beta, like high risk
And
stocks.
Neo's out of it recently. It didn't make the cut anymore because end phase is giving me too much of an opportunity. So I'm trying to balance the boat a little bit. So I've been balancing the boat for about 6 months now, and now we're getting a little bit closer. But for sure, I'm a fan of Neo, but probably like 5 years from now, like the
Yeah,
story. So there's a it's a roller coaster that I'm in some portfolios I'm still in because I have more monies. But in the one that I'm trying to grow to 1 million, because I have this little challenge going where I put in 295 and I'm trying to grow to $1 million. It's just there's just no room for Neo right now in that particular portfolio. But I do want to talk to you about one. I'm curious, what are your thoughts on Tesla? Couldn't find any Tesla material from you in the videos that I was able to, that the algorithm drew me to.
yeah. It's funny. I probably should create like some Tesla videos, and I mean, I'll write that down because I know that they do well, and
Well,
it'll get like some
because
decent views.
tell people a little bit about your background before we get into Tesla, because some people may not know. I mean, you did go to a little Ivy League university called Cornell. It's
Yeah.
not exactly easy to get into it. So, I mean, your mind runs a little bit faster than most people.
I mean, I I went to an Ivy League school, but I mean, whatever. Like basically, Ivy League schools, all they do is they aggregate very ambitious people, and then they take credit for their success, and then they always bug me about like making donations and things like that. And then, but I did work as an investment banker, like I mentioned, and then that was horrible because I looked at the managing directors and I was like, no, I don't want to be like them. Even if they make a lot of money, they're completely miserable. They're like alcoholics, drug addicts, and stuff. I mean, not all of them, obviously, but like some of them because they have to cope with the stress. Um, but yeah, I mean that's and then I used to live in New York for 13 years, and then I moved to South Florida, and I love Florida. I know that's probably not popular either, but I like living here. It's great.
Yeah.
Um, as far as Tesla is concerned, now my wife is like a huge Elon Musk fan. Like she loves him. Um, I'm always skeptical of companies that have superstar CEOs. I mean, I think if you looked at it like historically, then that would be a red flag. And I'm just a little bit concerned about. Now I know that there is like some rich volatility in there, but at the same time, there's also rich volatility in a stock like Nvidia. So for me personally, I want to be like very careful with my money because I've worked so hard for it, and
Right.
even though, and remember, like losses hurt significantly more than the gains feel good. So from my perspective, I would rather earn less money and have less volatility in my portfolio than trade something that I think has way too much volatility, in which, you know, the next earnings announcement could potentially drop like 30%.
What about Kathy Wood's bull case, though? Like, do you think that Tesla has the goods to be, a 3 billion or $5 billion company because they have so many potential verticals?
Trillion, like 3 trillion.
Three
You know,
trillion.
it's weird. I think the government, I don't want to like get political, but I kind of feel like I watch a lot of Scotty Kilmer on YouTube, and he's like completely against like electronic vehicles, and I'm not really like a fan. I mean, I think hybrids are great, even though I have like just a regular Toyota Highlander.
Mhm.
I think that building out the infrastructure for electric cars is going to be difficult because um, you have like gas stations which are so ubiquitous, whereas like charging stations, like they take a long time. And I know that there's going to be a lot more competition from China. So I just, but look, if the government wants it to happen and they keep subsidizing them and they keep encouraging both consumers and states and the federal government to give more subsidies, then people are going to purchase them. But I think that if they were left to their own devices, and I know that this is also not going to be popular because Tesla is kind of like a little bit of a cult,
A
in my opinion.
bit.
Yeah, it just seems like a little bit of a cult. And my wife is part of that cult for, even though she definitely is. She loves Elon Musk.
Yeah.
But I just think it's a little bit too risky. And I think that without help, um, and without help from like politicians, I
Right.
just don't necessarily see, because the electronic car vehicles, they're not nearly as green as people think. Like all the mining for lithium and things of that nature. I mean, they're way better and more green energy sources, like even hydrogen and things like that. But kind of like with big pharma, oftentimes the best medications are potential are like off patent and they're generic, so they're not making any money from that. So then they're going to push potentially inferior drugs that they can make more money from. So yeah, I'm not as you can probably tell, I'm not necessarily like a huge Tesla fan. And yeah,
Yeah, I hear you. I think that Tesla has the goods. I think their bull case is Elon Musk, but I also think the bear case is Elon Musk. And that's the
you,
part that
you know
scares
that
me the most.
that is an issue. Like if God forbid something happened to Elon Musk, that stock would drop like 50%. And then he's
Well,
also prone to like some erratic behavior. Like um, I think maybe it was like 4 to 5 years ago when those miners were when those like kids or miners were stuck in a shaft in like Thailand, and he
yeah.
like dropped everything and then went over there, and then he said that he put together like a submersible,
Mhm.
and he was like capitalizing on the headlines. But then the people that interviewed, they said that what he put together didn't even work. It didn't even like navigate the tunnels. And then I think he called the guy like a child predator or something. And I was like, what the like why this guy's like a little bit like I wouldn't want to risk like a large part of my portfolio. And maybe I'm wrong. Look, you can hit home runs and make a shitload of money, and from doing that, I hope I'm wrong because I don't want anyone to lose money, but it's just simply not for me.
I hear you. So one other question, and I'm asking you questions that kind of relate to my portfolio just to get your insight. Fair enough. What are
Sure.
your thoughts on Bitcoin? I didn't see any of that on your channel either. Talk to me about Bitcoin. What do you know? Do you know who Satoshi Nakamoto is? That way you can help me out because I don't know who he is.
All right, so Bitcoin, right? So I used to live. All right, this is an interesting story.
And the reason I'm
Um,
telling you is because I'm asking you is because you live close to where I feel it's like the Bitcoin capital of the world right now.
okay, so 2000. So I moved to Miami in 2017. Um, I lived in this place called Icon Brickell, and Miami.
My best friend Henry lives there. That's like the Wall Street of Miami, guys.
Yeah, exactly. And Miami is a very, very interesting culture, where you have a lot of older people with a ton of money, and um, in like the Russian and my wife she's not Russian, but she's from Kazakhstan, so she has like a lot of like Russian influences. Miami has like a lot of Russian and a lot of Latin influences. And in like the Colombian, Venezuelan, like Russian, it's very, very common for men who have money to take on like, like younger girls and support them. And the reason why I'm saying this is that around like 2017, 2018, I would hear these like girls, like escorts in the elevator at Icon telling me that they wanted to get paid in Bitcoin from their sponsor. And when I heard that, I was like, this thing just seems kind of like a scam and like a little bit shady. And this was at the time when Bitcoin was trading at about like 5 or 6 thousand, and then at one point it jumped up to a high of like I think 18,500. That I think that was the high of like when it hit like the euphoria, and then I think it dropped back down to like 6,000, and then I think it went all the way up like over 60,000. Although I will say that now, I do check the price on Bitcoin. The volatility that was present in Bitcoin from 3 to 4 years ago is no longer present. I mean, it's basically been trading around $26,000 to $30,000
For about a year.
for a really long time. And I've never owned any Bitcoin or any altcoins. Um, but if I was to trade it, then I wouldn't mind trading options on it and collecting premium. And I also think that right now, um, if your goal is to like limit your downside and to not necessarily like be a pinball, then I think that Bitcoin right now, especially with looking at the price action from over the past year, I think it's fine. You know, I don't necessarily think that it's like a scam, or I don't think it's like a pyramid scheme like I used to. Not that I ever thought that the coin itself was bad. I just thought that people were kind of like blowing it up, and they were trying to like to make Bitcoin almost like a pyramid scheme where it's going to be like 5,000 and then 500,000, et cetera. Like we have no idea what the price is going to be. But just looking at the price action over the past year, I feel much more confident if I was going to take an investment in Bitcoin, and I would feel confident doing that.
So here's another one for you.
Let's keep them coming.
Thoughts on solar, specifically a company called Enphase, since I have recently tied up over $1 million in this company. Are you familiar with Enphase first and foremost?
I am not familiar with Enphase. I have done a little bit of research into solar, primarily because my in FPL, which is like Florida Power and Light, um, my electricity has gone up like a lot, and I think like living expenses have gone up a lot for everyone over the past, recently over the past year or so. But my FPL, my electricity bill has gone up like 35%, and I was a little bit surprised. So I looked into solar. Um, again, it's kind of similar to Tesla, where as long as you have a lot of government incentives for adoption, then it does seem like the government is pushing it. I think though that there is a little bit of political risk where if you remove someone from office that is not potentially gung ho on solar and all these green initiatives,
Right.
then I think that's a huge issue. So for me personally, I don't, as you can probably tell, even though I haven't explicitly said it, I try to trade stocks and indices where like there's very little risk of me blowing up. Like my worst trade this entire year was actually Dollar General, and I think it was the only losing trade this year that I've had. And Dollar General had like its worst trading day in 14 years, I think back in like July, where it dropped from like around 100 down to like it dropped to like I don't know, it dropped a lot, like close to like 25% in like one day. And yeah, I lost like I think maybe about like 5 or 6 thousand, and then that's been it. I don't really like losing money, because remember, like if you lose 10%, you have to make 11%, but if
Facts.
you lose 50%, you have to make 100%. So I'm not really like someone to ask about solar. Um, I don't necessarily think that that solar for many people is worthwhile. Like maybe if you live in Florida or things like that, but then there's also an issue with who does the install. Like I've seen videos about just companies like installing it and then collecting a deposit and then just going bankrupt or doing like a shoddy job. So yeah, I'm not really sure about that.
Gotcha. Here's one because Dallas is the one that introduced me to you. So
Plus, one last thing on solar. Solar has actually been around for a long time. Like I
yeah,
remember when I was working as an investment banker, like it was because I was in the industrial growth and services group. So we were also like looking into solar, and this was like almost like 20 years ago. So solar's been around for a really really long time, and you have those like cheap panels from China that are coming in. So yeah, like if the adoption hasn't really picked up tremendously, and yeah, like if you have huge government incentives, then I think they will. But yeah, yeah, I'm not like super bullish on it.
gotcha. No worries. Let's keep it going. This one's a fun question because this is one of my largest holdings in across all the portfolios, and it's 100% of one of my 401ks. So let's have it right here. They said that we were backstage, and I was telling you not to say anything bad about SoFi.
Okay.
Are you familiar with SoFi and specifically Anthony Noto and their mission to be a one-stop digital shop for all things finance.
Okay, so SoFi, I think one of my friends, Mike, is invested in SoFi, and wasn't I think a few months or like a year ago, it was trading at about like $15 or something. Is that accurate? And then maybe it dropped like below 10.
Yeah, it went all the way up to like 23 or 24 bucks whenever everybody was a genius, I think up until November of 2021. And then we all got dumb again. And it went, it reverted back to the mean. And then I think it went as low as like 420 ish or something like that. And now I think it's between 750 and 775, something like that.
Is that like a Japanese company where they make like big investments in other, or is that a different company? Like oh, maybe that's SoftBank or something. I
Yeah,
think that's
SoftBank used to have a big stake, I think, in SoFi. No,
okay.
SoFi, like SoFi Stadium in Los Angeles,
Yeah.
they're a one-stop shop. It's like an app on your phone, and it's all of your finances are at your fingertips. And they have this they bought this it's called Galileo is another company, and they bought another company called Technisys, and they ultimately want to be the AWS of fintechs. So they have all of this infrastructure, and for other banks to utilize their infrastructure, they would have to pay SoFi a cut. But
Oh, I
essentially,
mean, hey,
go
look,
ahead.
that like toll road business is extremely profitable. So, and what's their competitive advantage? Or do they have like major banks that are adopting their software? Like, to be honest, as you can tell, like you're
Sure.
asking me a question about it, but I don't really know anything about the company, so I'm probably not like I'm ignorant about it. So I'm not the best person to
Well,
form an opinion about it.
open your eyes to SoFi, man. I think that it is my Google. I
Okay.
invested, $16,000 into the Google IPO, literally the second day that it was available to purchase, and I sold it. I sold it because I needed the money. I was up to 81,000 bucks, cashed it out, paid my taxes. I think I had like $60,000. I put it down on the house, and it worked out for me. But we did the math on the channel, and that would be about 850 grand right now. So I think that's who SoFi is to me. But it's a one-stop shop for all things finance. They've been growing 30-40% year over year as far as their top line. They're they have an adjusted EBITDA that makes them look good, but they're not GAAP profitable yet. They're expecting to be here in Q4, which is a big, hopefully will be a big momentum boost for them. But my big play on SoFi is something that might not be suitable for you based on what you've told me about Elon Musk. They have this stud as a CEO named Anthony Noto, but Google Anthony Noto, and you'll see that he's not a loose cannon like Elon Musk.
It's funny that you mentioned adjusted EBITDA because that's basically the valuation metric that we as investment bankers use. We always use like the enterprise value, which is like the what the company's worth
Right.
over like the last 12 months EBITDA on an adjusted basis. What's the market cap of SoFi?
About 6 or 7 billion. They could help me out in the chat, dude. I got a lot of nerds on the chat right now that they could help me. I can pull it
Six
up.
billion. And I mean that's pretty small.
It's a baby. It's a baby, but dude, they've got it going on. Now, don't get me wrong. There's risk. There's risk. So the market cap is 7.38 billion.
Mhm.
SoFi, ultimately it was a student loan company that were able to transition. Obviously, student loans haven't been around for the last 2 or 3 years. I think people are finally going to start paying them back here pretty soon. But man, this company is just got it going on, brother. I don't want to tell you too much because I want you to put in the work, and I want to have an episode with you on what you've learned about SoFi. That's kind of the hook here for you, because I have almost 500,000 shares of SoFi, and my
Okay.
adjusted cost basis is under $5. So
And what's it
I feel
trading
like
at
I'm
now?
the wrong person to talk to because my confirmation bias is so lopsided already that it's hard for me to see through the fog.
What's it trading at now?
It's 777.
And I assume you're selling some cover calls on that as well, since you have a huge position.
Absolutely, brother. I don't like squatters. And then we'll talk about that in a
What?
second because I know that you're a fan of buying options. Until I get to $1 million, I'm not buying options on this channel because I'm trying to make the book a real thing. As far as like I'm saying, I'm selling puts, selling calls, collecting premium, and rolling my positions, defending them that way. But I'm not buying puts and calls to really defend my positions because that's what I should be doing.
Are you using portfolio margin in your account or regulation T? I
Yeah, no,
assume PM, right?
no, I sell puts on margin, but I've only taken ownership of shares on margin for a very short time because I'm not trying to pay interest here, and that's a real
Yeah, yeah.
smart way to blow up your
And
account.
then for SoFi, like for the covered calls that you're selling, are you selling like 1 to 2 weeks out and a strike price of like $10 or $11, or like what are the covered calls that you're usually selling?
Yeah, so about half of my cover calls are actually tied up until January 2024 and 2025, and it's $10 strike prices on both of those. And
Interesting.
then
So you collected a lot of premium for that. That's good.
yeah, so this is what my strategy is in a nutshell. I like to sell, I call them backstop trades. I like to sell leap puts. So people like to buy leaps, I like to sell them, and I get all of that premium and I sell short-term leaps or
Yeah,
short-term. So
you
and
sell
then
short. You
I
sell
sell
short
put
term what against
short-term
it?
puts.
Okay,
So
okay, that makes sense.
I sell a long dated put, right?
Okay,
And let's say it's on SoFi, for instance. Let's just use SoFi. I'll sell a $5-6 put a year to 2 years out, and I'm talking about tying up $500,000 to $1 million, and then grabbing like about 30% cash on cash return,
right.
and then I take all of that money, and now I have an artificial injection of cash because that's what it is.
Hmm.
And then I sell short dated puts, and I realize all of those wins, and then I look up a year later, and I'm like, holy shit, I hit 30% for the year.
Yeah, yeah, that makes
It's
sense.
all
Especially
predicated on that backstop trade. So
right,
if
right,
there's a hole in my net when you're playing little league baseball, and let's say there's a hole in your backstop, you're gonna have some problems, right?
right.
So
Meaning like as long as it doesn't penetrate that like that $5 price, because if something's like very deep in the middle, very deep in the money rather, then selling those covered calls, you're not really collecting much premium if it's very deep in the money.
right. So if SoFi doesn't tank to below like say 350, I'm in really, really good shape. But I keep doing that over and over on the same stock, dude. Like this is already my third round of leap puts on SoFi, and I've been using all of those monies to sell short-term cash secured puts, or if it's in my buy zone, I'll take those monies and I'll buy shares outright with those
Right.
monies, and I'll sell cover calls on those. And I'm just compounding this premium on top of premium. It's like a premium orgy.
That's, that's funny, dude. That's funny. And 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 unlike the Russians and unlike like the rich people in Miami, you're actually getting paid for that orgy. You're not actually paying for it, you know?
So
So
can
it's
we
even
talk
better.
about that? Can you talk about why you chose? Because I see you tout 98% win rate a lot. So I want to talk a little bit about that. And let's
Yeah.
get into your beststockstrategy.com. So why did you choose selling options? Because to me, it was just like I wanted something where the odds were in my favor. I worked all my life for this amount of money. And if I'm going to put it at risk, I want to feel like I'm going to win 60, 70, 80, sometimes 90% of the time. I wanted the probabilities in my favor because this is what I learned right away in the stock market. I can't pick a bottom to save my life and forget about the top. That's not even a question in my mind.
Yeah.
I can't do it. So I rely on some technicals. I like the 200 day. I like the 50 day. I like an RSI. I like a stock that's a bit oversold and get me comfortable selling a cash secure put there. And there's little things that I use, right? Real basic beginner shit that a lot of people could figure out 20, 30 minutes on YouTube.
You know,
But
it's
at
super
the end of
funny.
the day, what I like is a company that I really believe in for 3 to 5 years. Because if I can sell puts and calls on that stock over and over again, I'm going to look up. And in SoFi right now, I own 250,000 shares free and clear. And that's hard to lose money when you bought them with somebody else's premium. You know what I mean?
I think it's funny that you mentioned those technical analysis like indicators, because I came out with a recent video of whether technical analysis is BS, and I said that it's about like 80 or 85%. But I did mention that price action, like some moving averages like 50 and 200, and also like RSI, like oversold,
Oh,
undersold, are things that are valuable,
yeah.
and those things are actually like the most simple things.
Yeah.
The 98% win rate is good, but also remember that YouTube is a competitive landscape. So it helps people, like it helps attract attention. But the reality is that unless you're hedged and unless you eliminate that tail risk, it doesn't necessarily matter if you win, because you can win 98% of your trades and you can still lose money and be a losing trader if you have a few, like, look, even like over the past month, where at one point I think the market was down like 8 or 9%. If you have a position that's very deep in the money, that can wipe out your gains for like 6 months. So I think it's very important to, in my opinion, to only trade options on stocks that you want to take ownership of. At the same time, I do think that there are some things that you can do, even like buying calls, especially during times when volatility is low. That way, you're not paying a significant amount of extrinsic premium.
Mm-hmm.
And if you buy a leap and then you can sell short dated calls against it, then you can actually make
So
money in that leap will end up paying for itself.
like a PMCC, like a
Yeah,
portmanteau.
exactly. So there are things that you can do. I think that there are numerous strategies that people can implement, but I think that the most important is really to only trade options or to take ownership of stocks that you truly believe in, and to also like hedge out your tail risk, and to have a combination of strategies where you're not just like selling premium. Because remember, when you sell premium, your maximum amount of profit is going to be the premium that you collected. And
Right.
that's where people come up with the analogy that you're just collecting pennies in front of a bulldozer. And while I do agree with that, if people don't hedge out their tail risk, I disagree with that, where you can collect premium and then take ownership of a stock. And kind of circling back to even what we were talking about, the very first thing, where if you wanted to take ownership of SPY, then you could beat the market just by selling an in the money put option that expires tomorrow and simply collecting that premium and then taking ownership. So I think that implementing numerous strategies, but probably the most important ones, are to not gamble with your money, to sell options, or to buy stock of companies that you genuinely believe in and that you want to own, because none of us can tell the future. And also to hedge out that tail risk, because the reality is that when the market gets sold off, everything gets sold, and the market tends to be pretty rational, except at extremes. So during 2020, when the market fell like 36% in 33 days, or numerous other situations, you don't want a situation where the market falls 30% and then even really good companies end up going down, and then you're long all these shares, and then before you know it, you're actually owning those shares below your cost basis. And then even if you sold the covered call, you're basically collecting like no premium, or you
Right.
have to sell it at a strike that's actually below your cost basis.
That could be dangerous if you don't roll.
Yeah, because it's that correlation risk.
Absolutely. So
And then
Gallup,
also,
which is the reason that we're here, so I want to put this out there for him. Ask him about how trading PayPal led him to using more spreads. So I don't
okay,
know.
so this is actually a really, really good question.
Okay.
Really good question. So regarding PayPal, this okay, so human beings, they have a tendency to have like a psychological bias. And um, with PayPal, there was a situation where it was trading, I think it's like all-time high was around like 307 or like around that. And it was trading at about 228, and then I sold a put option for like 215. And what happened was it reported earnings, and it fell from like 228 to like 203, and I didn't have that many contracts. And what happened was, I was having like a really good year, and I wanted to win like, because there have been years where I've won, like where I haven't had any losing trades, because when you sell so far out of the money,
Right.
then you're basically, your theoretical probability of profit is like 95%, and then you roll and you have an accommodating market. It's not completely unheard of where you can have a year where you don't have any losing trades. And I
Right.
thought that it was going to be the same situation with like PayPal, etc. But what happened was, PayPal just kept falling, and that wasn't exactly true, because it kind of like traded from like 160 to around like 180, like 160 to like 185 for like a long period of time. But the problem that I had was I thought that PayPal was going to bounce back, and then the biggest mistake that I made was I kept adding to that position. So what would have been a situation where, had I taken the loss at that specific moment, or had I sold some call options against it to then roll down the 215 strike to like 210. And then, at one point, PayPal actually traded up after it reported earnings to about 213. And then also on January 3rd, 2022, I was actually showing a profit on the PayPal position. But then, unfortunately, I just wanted to show even a larger profit. And then starting around January 3rd, 2023, that was like the high point of 2022. And then the market basically collapsed under itself. It's kind of weird. Like, I might have like borderline like autism, because I can like remember like numbers and like things like that like very, very well for some reason. Like I've always had that weird ability. But yeah, so with PayPal, people have an ability, or people have a psychological bias for loss aversion. And for me, I just thought that, hey, PayPal, it's at that point, I think it was like a 250 or $300 billion company. It was trading at like 307. And I think it's going to bounce back. I've always made money on PayPal, and I increased the size of my position dramatically. And I lost like a decent amount of money on it. And ironically, I lost. And then to answer the second part of the question, I trade more spreads now, because when you trade spreads, it neutralizes that tail risk. And we just never know how low a stock is going to go. Like, I bet you when Boeing was trading at $400, and there were people who bought it at 444 or 446, which is its all-time high, if they held it to when Boeing was trading at 89, they got completely annihilated. Or what about even the people in NVIDIA, right? Like, everyone's talking about how NVIDIA started the year at 100 and now it's trading like over 400, but there were people who bought it at like over 300, and then they rode it all the way down to 100. So I think it is very important, especially with those like high flying stocks, to always ask yourself, what happens if I'm wrong? What happens if I'm wrong? Like, because you don't want to put all your eggs in one basket. It's very difficult to make money, right? Like, and then also you have a psychological component where, like, when I lose money, I'm like very, very stressed out. Like, why the hell do I want to deal with that stuff? Like, especially now that I'm getting older, like, I'm not 20 years old where I could deal with stress as well as I could before. So now that I'm getting older, like, I don't want to deal with like that portfolio volatility, you know? So regarding like how wide do I make the spread? I think it really depends upon, I think it depends upon, okay, so when you trade a spread, right, you're making money from the option that you're selling, from the short option that you're selling.
Right.
The long option that you're selling can be determined by the price that you're paying for that long option and the protection that it's going to provide you. Like, for example, if you're going to trade a short put for 100, it doesn't necessarily make sense to buy a long put at 50, because you're not necessarily achieving that much buying power efficiency when your width of the strike is that long. If you have a width, because remember, if you trade naked using regulation T, then it's going to reduce your buying power by only 20% of your maximum loss. But if you make your spread so wide, the brokerages treat your vertical credit spread from a buying power reduction perspective. They look at the width of the strike less the credit received. So you have to make your strike and you have to make your spread narrow enough so that you're realizing the benefit of the buying power reduction, but at the same time, you don't want to spend so much money for that long put option where it significantly decreases the amount of premium on a net basis that you're collecting. And you also want to make sure that that long put option protects you against like some type of tail risk. So yeah. So let's say if you were to sell like $100 strike, let's say a stock is trading at like 120 or 115, and you're like, hey, I wouldn't mind owning it at, like, let's say like something like Amazon, even though it's trading above that. I wouldn't mind selling a put on Amazon at 100 and then buying, like, let's say like the 85 or the 90 put option. Or, even if you want to be more aggressive, like if you wanted to sell like the 105 put, and then what you could do, you can sell the 105, you can buy like the 90, and then even if you wanted to, like if that trade got challenged, you can actually roll that spread to naked and probably roll that all the way down to 95, and then make the decision that, hey, if Amazon breaches this 95 strike, then I'm going to take ownership because you know that last year Amazon's low, I think, was $82.
Right.
So if you own it at like, on an effective cost basis, including all the premium you collected, like 92, 93, then that's pretty safe. And then you can sell some covered calls against that to further reduce your basis.
Gotcha.
And
So
then
one of my fellow wheelers is asking me. He's a big contributor to this channel, and he's asking me,
ask what?
ask what his expected annual ROI is.
That's a great question. I target
'Cause I
about,
shoot for 25%, and I'm actually at 33%. I run a hedge fund, by the way, a
okay.
boutique hedge fund. I've got about 20, 25 mil assets under management.
Oh,
And I've been
that,
hitting 33% fourth year now.
so is that like friends and family, or are you accepting outside investors?
Friends and family is about 75%. And I recently took on some outside investors, and bro, what a headache.
Okay,
what,
so you're
what
like so you're registered with FINRA and like all that stuff, and you file like all the
Yeah, I
documentation.
hired I hired a company to do it.
Yeah, it's a
Yeah,
big thing,
yeah,
but
because you have general. I'm general partner, then I have the limited partners.
yeah.
He has to go into the bank goes to the brokerage, and then there's a third party that handles the admin. Bro, it's a shit show.
It's
But
almost easier just to. One of my friends, actually, I had him on my channel, Shane Neiman. He's like incredibly wealthy, and he has like a family office, and it's so much less headaches when you're not
cleaner,
dealing with regulators.
way
Like,
cleaner.
and it's much less expensive. You don't have to pay for like prime brokerage and like all the clearings and like and the documentation fees and like all that stuff. But all right. So to answer that question, we target about 2.5% a month in all market environments. And then the other thing that I just wanted to briefly talk about when Dallas asked about PayPal, I learned from that with Dollar General. With Dollar General, that happened, I think, in like July. When Dollar General fell like 25, 30%, it was pretty comparable to like what transpired with PayPal. And I just took the loss and that was it. So there wasn't a situation where I hoped that it would go up more,
Right.
or, I was just like, I was playing games by selling more put options and things like that. I did sell some calls against that, but that's not increasing my risk, because I'm not adding to like the losing position on the put side. And with Dollar General, I just closed it out for a few $1,000 loss, and then that was it.
So how do you feel about PayPal now at these prices? Because man, I've
It's
got to
at
say
like 60,
the
right?
risk reward seems pretty appealing on PayPal right now,
You
considering
know,
that they're buying back so many shares.
I do think that. I guess I was kind of like snake bitten by PayPal, so I probably wouldn't trade it just because I've been like PTSD psychologically. Sorry, well, not really, but you know what I mean. Like I
I
just don't
hear you.
really.
And there's a lot of validity to what you're saying, guys. Pay attention to this because there are some stocks that even though I've made money on them, because I left so much on the table, it's hard for me to go back. It's like a sour relationship if I
Yeah,
just leave it in the past. Because I feel like I'm not going to be emotionally stable when I deal with that stock. Is that what PayPal is to you right now?
I think so, and also I kind of feel like it's just a way different company that it used to be. I mean, when I was trading it, PayPal, when it was trading at like 307, or at one point, it was worth hundreds of billions of dollars from a market cap perspective. But now it's a much smaller company. And I guess the best thing that I can say about PayPal is that it's consistent. It seems like it has a floor of around like 58, around 58 to like 62. And when you have stocks that have a very narrow trading range that have already experienced a very large drop,
Right,
but that also have like a strong brand, and PayPal does have a very strong brand,
for sure.
then I do think that a lot of the risk has already been removed from that, and you can basically like make a lot of money by selling like those 52 or $50 strike prices. Because PayPal hasn't really given us any indication that it's going to penetrate below that like 57 or $58, because it's been very consistent with its price action in that trading range.
Agreed. So I got another one just to help me out with my portfolio. You're essentially analyzing my portfolio indirectly, just so you know. Are you familiar with a company called Palantir?
Yeah, it's funny you said that,
But
because
most
when
nerds
you
are, so I figured you got to be.
when you were asking me about SoFi, I was going to ask you about Palantir. I was like, hey, are you also like super long Palantir? Because that's kind of
I
So
bought
okay,
10,000. I bought 10,500 shares of Palantir in the last week to 10 days.
and what's your cost basis on there? What's it trading at?
Pay Palantir between 15 and $16, dude. It fluctuates.
Okay,
My cost basis when I added up the entire scores around $11 or so.
11. Yeah, it's funny you said. I was
And
thinking 11 in my head.
selling
Yeah.
puts and calls on it for since it IPO'd. But I got out of it. I made quite a bit of money on Palantir, but it shot up to like $35 or something crazy. And when valuations don't make sense to me, I just exit the position because it's out of my sphere of competence. So I have zero confidence.
Okay, to be honest, what you just said might be the most important thing, in my opinion, of this entire chat. I think that many other people don't do that. They start like getting drunk off their own Kool-Aid and start like drinking their own like drinking their own supply, high off their own supply. What you just said is so incredibly vital because even if you take companies that are like really crappy companies, there are times where there's very high market conviction and the market can like make that company, it can bid it up to an extreme where there's a lot of euphoria in it. And at that time, most people they ride it up and then they ride it down as well because they think that this is like their lottery ticket and they think that it's going to continue going up forever. And this happens all the time with like Ponzi schemes and things like that, where people just hold on forever and then they ride it up and then they ride it down. So what you just said gives me dramatically much more confidence about some of the more speculative positions in your portfolio because you recognize that at times the market is going to be euphoric, and if it does hit that level, then you're just going to sell it and then reallocate money to a different company. So I think that's amazing and probably one of the more valuable things that we probably the most valuable thing that was said in this entire chat. That if valuations don't make sense and you're up a lot of money on it, just get rid of it and move on to something else. Okay, now regarding Palantir, I also don't necessarily know a lot about it. I think it's like an AI company. I know that it was started by one of the more successful like private equity founders.
Peter Thiel,
Wasn't he even part of like the like
Facebook.
the PayPal
Yes,
mafia? Like
yes. Him and Elon Musk,
yeah.
a
So
couple other
he's like
guys. Those are the two that stand out in my mind. Y'all
yeah.
can help me out in the chat. The people know, man. My chat's way smarter than I am.
So he's brilliant. I mean, he's brilliant. He's probably like one of the more he's probably in like the top 0.5% or 1% of private equity investors. I mean, that guy is brilliant. So I would probably feel more confident in Palantir than I would. Well, to be honest, I don't really know anything about SoFi, so I don't really. I'm going to look into that.
Just do me a solid. Invest 20 minutes of your life and just study Anthony Noto. Forget
Yeah,
about
I am.
SoFi.
Yeah, I'm
So
going.
Anthony Noto, just real quick on the Anthony Noto Kool-Aid. He's a Army Ranger, West Point graduate, worked for a little company called Goldman Sachs Twitter, and he was the CFO of the NFL. You might have heard of them.
Of the NFL.
Of the NFL. So I'll leave you with that. I'm gonna give you enough to masticate on. I gotta use those Cornell words for you.
Cool. Yeah, so I'm not necessarily against Palantir. Plus, also remember that if your cost basis is at 11, and that cost basis is going to continuously like gradually decline as long as like Palantir doesn't crater. So if Palantir stays within a range and as long as it stays elevated above like 12, you can still reduce your basis probably down below like $9 to $8, etc. So at that time, you don't really have that much risk in a stock that you own with a cost
They
of
have about
$8.
They have about 3 billion in cash. They have contracts for years, and they have probably less than a couple hundred million in debt.
Yeah, I mean, look,
If that. So they're
from
very,
looking at it
solid balance sheet, and they're buying back $1 billion worth of shares.
yeah, from a banking perspective, I mean, the way that we looked at EBITDA because it neutralizes the company's capitalization structure, and then also like when analyzing or calculating like the enterprise value, you would take out the amount of cash on the balance sheet
Right.
because and look at like the net debt and the liquidity ratios. So the fact that it doesn't have that much debt and the fact that it's also that it's very highly covered and that their CEO or like their founder is one of the more successful private equity guys, and he also seems to be like less less enigmatic and less um, you know, I wouldn't say weird, like that's not the right word, but I can't think of a better word. He's just more like less risk taking than Elon Musk it seems. So I think Palantir is fine as long as you can, sell puts on it with a strike price of like 12 or 13 and then collect a decent amount of premium. Then if it falls below that, then you would just take ownership of it.
Absolutely. So appreciate all of it. I want to ask you this one question though. I had it here and I know you touched on it a little bit, but let me circle back. It's to the beginning of the chat here. I know you do a lot of things. I know your arsenal is vast. You are way more advanced than I am in the options game. But I know how to sell put, sell calls, and collect premium, and I can roll like a fucking firefighter. Like, whenever there's a fire, I'm gonna stop, drop, and roll, and I'm gonna roll right until I'm right. That's what I do for a very, very, very lucrative living, and I'm very blessed to do that and to be able to say that on this channel with confidence. And I have all the receipts in the world to show it. But if you only had one strategy in your arsenal, because your arsenal is a lot, it's a lot more extensive than mine is. If you could only use one tool in your entire arsenal, would it be to sell out of the money cash secured puts so that you could beat the major indices, or would it be something else after, because you've graduated to different levels in the stock market than I have?
That's interesting. I do try
As
to
a
keep
trader and investor.
things like pretty simple. On the one hand, like I'm making a lot of money on trading one DTE, but I don't think that that's for everyone because I'm using portfolio margin and things like that. If I only had to choose one, I would probably sell puts on an index. Or if I wanted to be like a little bit more aggressive, I would sell puts on like something like QQQs or VNQ or VNK maybe. I think it's VNK. But I'd probably choose like an ETF or an index like SPY, and just sell out of the money puts, and then just wait, and then basically wait to get assigned, and then just hold it. If I only had to do one, because the reality is, like I said before, most people don't beat the market. So if you're selling puts on the S&P and then you get assigned, you're basically guaranteed to beat the market. And then by doing that, you're essentially like already a better investor than, 80 to
99%.
90% of the people. So it's like, so I think keeping it as simple as possible, if I only had to choose one, then that would be it. Plus also remember that if you do that strategy, it frees up a lot of your time. So then you could focus on other things. And some people are super passionate about trading in the stock market. Other people are not. So if I had to choose one strategy, then that would probably be it. And then I would focus on other things and not really have that much stress regarding checking my portfolio like 10 times a day, etc.
Absolutely. And one last thing, I'll let you go to your wife. And I'm trying to stay married. I don't want to go downstairs to mine. How do you track your trades? Do you have a Cornell level Excel sheet, or what do you use? Because you're in the investment banking background.
It's funny. Because I have a pretty high win rate, I basically and I have a memory where I'm able to like remember like the trade. So I can remember like almost all the losing trades that I've done, and there aren't like that many of them. And really what it comes down to with the way that I trade is when you do have a losing trade, just making sure that you eliminate the tail risk. And then like every year or so, or for every losing trade that I have, I will evaluate and say, okay, like what did I do here? That like, did I give into like psychological fallacy, like loss aversion? Okay, then that means that I have to be more aggressive and be loss seeking, which is what I did with Dollar General. But I show all my trades on YouTube, like on a monthly basis. So I guess that's kind of like an archive for both myself and for viewers as well. But
Right.
I don't have a like a Google sheet or a document or anything like that. I mean, yeah, that looks like a financial model that I would put together
Yeah.
using like
So I had
Excel
a CFO.
shortcuts and
I had
stuff.
a CFO. Shout out to Troy Hutch, the angel of the channel. He is. I mean, he's my guy. I owe him lunch for the next 55 years. You know what I mean? So he put this together for me, and I actually use this for the hedge fund as well. Like, this thing is just it gives me everything that I need.
Dude, that's amazing. when I would build models for investment banking, we used to have like macros that we would build into Excel so
Yeah.
that we could like use Excel without even touching the mouse. Like you would get yelled at if you touched the mouse. It was bad. But yeah, I mean, I think keeping track of your trades is important. But I only really trade like uh like 15 securities. So
Yeah.
that's that
Me,
on my
so I
watch list.
actually right now I only have five. I call it the Fab Five. It used to be the Super Seven, but Marathon Digital and Neo just didn't make the cut because the portfolio is just extremely volatile as it is, and I'm trying to minimize some of that volatility. And that's kind of one of your claim to fames is you have to
Yeah,
manage
eliminate that portfolio volatility. Yep.
that's one of your big things. But this thing here tells me it tells me the number of shares. But I know you're on your phone, but I want you to just look at the adjusted cost basis. It's all about road 20 for me. Like when I say I'm going to manufacture the win, I'm trying to lower my adjusted cost basis to $0 per share. So on in phase, I'm at 113. It's currently trading at about 120 ish
Mhm.
on Palantir. On this particular portfolio, I only got 3,000 shares, but I do have a adjusted cost basis of 787. On a Bitcoin miner, I have 15,000 shares called Riot Platforms, and I have an adjusted cost basis of $1.92. It's currently trading at 943. Palantir is trading at 1577. And on my beloved SoFi, I have an adjusted cost basis of 467. It's currently trading at 777. And on Elon's company, Tesla, I've got an adjusted cost base. It's only 200 shares though, so keep it into context. But I have a $143 cost basis, $124 cost basis, and it's currently trading at 246.
I
So a lot
mean,
of work to do. I can
the
manufacture.
reality is that for those companies where your cost basis is so low, like 787 for Palantir, which I think is amazing, Riot at like $1.92, you're eventually going to get to a point where you have where you have a negative cost basis on those shares. So you only have upside. And it seems like, is that one of your goals to, because I think that's amazing. Like you can't lose money when you have a negative cost basis, right?
Stay tuned. I got something for you. Stay tuned. Let me show you. Let me show you the real portfolio. Okay, that's the bullshit one. Let me show you this one over here. So there's that one. So this is my this is my baby right here. So let's go back to road 20. It's always road 20. So in phase, I've got 3,000 shares over here. Cost basis of 91. Neo, I got a cost basis of 816, adjusted cost basis of
Mhm.
816. So adjusted EBITDA, right? We got Palantir over here, 15,000 shares, but we do have an adjusted cost basis of 1126. But I want to draw your attention to it was column I, number 20. I have an
Minus
adjusted cost
18.
basis of negative 1816. And then SoFi, I got 50,000 shares over here, an adjusted cost basis of 572. And Tesla, 1,500 shares was an adjusted cost basis of 116.46. And I'm basic, brother. I sell puts, I sell calls, I collect premium, but I also probably overutilize the art of the rule because I'm not going to take ownership of these shares until I see some sort of a trend reversal it's where I feel like, you know what, the valuation, I don't know what the market says. I don't know, Mr. Market's right based on the price today, but I think that I'm going to be right 5 years from now. And if Tesla dips to 150, bro, I'm going to be moving a lot of money to Tesla because I just feel like it's so easy to manufacture the win at those levels for me.
Well, yeah. Plus, also remember that Tesla, the implied volatility on Tesla is almost always high, or it has been. So, as a
Right.
result, you're able to collect more premium, and you'll be able to reduce that cost basis even more. I mean, I think that strategy is very solid. I think the only caveat is, do you find yourself more so attracted to less expensive shares because you have like a disposition where you're like, oh, this stock's only trading at $12, so if I just load up and sell calls and puts on it, then I bet you I can get that. Like, does it give you a thrill when you see that negative number where you're basically
It,
like you
it
have zero downside risk?
it does, but it's bit me in the ass a couple of times. There was a company called iDex that I lost $250,000 on.
Hmm.
It was just a fuck man, a great story, bro. A beautiful electric vehicle story. They were like a one-stop shop for all things EV, but at the end of the day, it was a lot of execution risk, and they didn't have Elon Musk at the helm. They had a guy named Al Gore, and I'd have stayed in this stock long enough, I would have gotten poor. so, so that shiny object syndrome of finding a company that has enough runway so that I can manufacture the win by going really heavy in it very quickly and getting out of there, and then having 10 or 20,000 shares that I can ride to the moon, so to speak. It's attractive, but it's just not sustainable. It's not scalable, because at some point I want to sleep at night. So
Yeah.
that's when we started finding companies that were modestly priced, like Palantir, but they had a very, very solid balance sheet. Fundamentals
Right.
matter as well, with the company. And I was like, okay, if it was my checkbook, if I got 3 billion and I only got maybe a couple hundred billion in debt, some will argue a couple hundred million in debt. Some will argue that you don't have any debt, depending on how you look at the books. It's real hard for me to go bankrupt. So I just look at it in that context with the companies. So it gave me a lot of a big safety net mentally with a company like Palantir. And then I'm bullish on Bitcoin. So Riot has a huge hodl. They got a cash position for them because they're a Bitcoin miner. They're extremely volatile, but they got, $300 million on the balance sheet. They have these energy credits that they worked out with ERCOT, which is our energy grid here in Texas. It's just a very, it's a sexy business model, but it's a very creative business model. And I'm one of those weirdos that thinks that Bitcoin's going to go to 100 grand and I'm going to make a lot of money. But if I'm wrong, well, I mean, shit, I've almost manufactured the win on it anyways, as far as I'm concerned, so it doesn't really matter. But
I think another thing, and you're full of of really good experiences and advice. I think one great, when you look at a company and it doesn't have a lot of debt, and I'm not really like a huge proponent of financial analysis, but for these like smaller companies that have I would be a larger proponent of fundamental analysis if I was interested in stocks that have a market cap of like under like 30 or $50 billion.
right.
And in that situation, I do think it's vital to look at the balance sheet and to look at the statement of cash flows. And you want something that doesn't have a lot of debt and that also has a significant amount of cash, because not only does that protect you against bankruptcy and from creditors, but also, especially in a situation like Palantir, where the founders are all very wealthy, I can almost guarantee that if Palantir starts trading at like $5 or $6, then they're going to do a share buyback, because they're going to realize that, hey, the best source of all this cash, the best return that we can get is to buy back our own shares.
Right.
So apparently that provides a natural floor that's an extra means of protection for that stock. And that's something that I think needs to be said, because you always want to protect your downside risk. So not only are you to be honest, I think that, and I'm not really I've never done any videos on Palantir, and I'm not like a Palantir fanboy, but from looking at your portfolio, I think that with what was your cost basis, like 787 or something, and then also
larger portfolio is a little over $11.
Yeah, exactly. And then realizing that they have a significant amount of cash on their balance sheet and they have a very successful founder, I think that is probably, in my opinion, like probably your best position.
I agree. I want to get a little bit bigger. I'm actually hoping it tanks to like 10 so I can load the boat, bro. But it doesn't matter what I want. Mr. Market's large and in charge. You know what I mean? That's the reality. So one thing I can tell you, David, is I've enjoyed this conversation, and I always like to give this piece of advice to another successful person on this side of Wall Street, right? Because we're trying to take those guys down. That's the reality. Is just don't fight Mr. Market. Like, don't get in a fight with Mr. Market, because you're going to lose. so pick your spots, man. Pick your spots. That's all I do. And I learned a lot from you. I'm going to go back and watch the tape, and I'll make the link available to you. And I would love if you would invite me over to your channel one day. That'd be great.
Oh yeah, I'm actually going to post this on my channel. So and to be honest, you have a great personality. You're like you're very successful. Which is fantastic. But at the same time, I listen to a podcast called Founders, and I think that what happens is a lot of successful people, people have a tendency to be happiest and most worry-free when they're kids. But as you get older, you kind of lose that innocence. So I think it's fantastic, just from from speaking with you and like from our emails. Like you just have a really good personality, and I think that that's incredible. So yeah, thanks so much for having me.
Thanks, man, and right back at you, man. It's not often that I get to talk with someone that knows more about options than I do, as far as at these levels, you know. And you use words that I'm just like, okay, shit, correlation, tilt risk. Now I got to go get my fucking notepad out, you know what I mean? It's just because I don't think that way, because I'm real simple, dude. I'm gonna sell puts, I'm gonna sell calls, I'm gonna collect premium, I'm gonna do it over and over again on the same stocks, and then one day I'm gonna look up and I'm gonna manufacture the win.
You know, the reality is that options tend to be pretty simple. Like you have calls and you have puts, and you either sell or you buy. You know,
Right.
it's not like as complicated as many other people want you to believe. So
Facts,
cool.
man. Well, hey, I've appreciated, man. I got to get rocking and rolling. Anyway, this is a TJ the Wheel Deal signing off with David from Best Stock Strategy. Check out his channel, guys. As always, may your sky stay blue and your stocks green. Peace out. God bless you guys.